There comes a point in every trader's journey where the strategy, the indicators, the chart patterns, and all the clever tools stop being the problem. The market stops being the problem. And you finally come face to face with the real opponent, the one sitting in your own chair, your own mind, wearing your own doubts and impulses like a second skin. Most traders never survive long enough to realize this. They spend their time chasing better entries, sharper indicators, and the promise of some perfect system that will free them from mistakes. But a trader doesn't fall because he lacks a strategy. A trader falls because he lacks mastery over himself. If you want to improve your trading psychology, you must begin by admitting what most traders refuse to accept. You can have the most powerful method in the world, but the moment your emotions tighten their grip, the method begins to crumble. A trading plan is only as strong as the mind that executes it, and the market has a talent for exposing the cracks in any trader's thinking. When I started, I didn't know this truth. I believed the secret was information. I believed success came from cleverness. I believed I could outwit the market with faster decisions and sharper instincts. But the market taught me quickly, painfully, that cleverness is no match for discipline, that information is no match for patience, and that instinct without restraint is nothing more than gambling dressed in confidence. It took years, fortunes made and lost, to finally understand. Trading psychology isn't a bonus skill, it is the foundation. Everything else is decoration. Most traders think their losses come from bad luck or bad timing, but more often than not, the losses come from the inability to tolerate discomfort. A trader sees a winning trade pull back a little and panic sells. Then he watches price run exactly where he expected it to go. He sees a losing trade and holds on to it, hoping the market will turn out of pity. It doesn't. He sees an opportunity, but fear keeps his finger off the trigger. Opportunity passes. Then anger enters, and he chases the next trade recklessly. These aren't market problems. These are psychological weaknesses, and unless you confront them, the market will confront you in ways you won't enjoy. Let me tell you something true. Even if it's uncomfortable, the market is designed to hurt the undisciplined and expose the unprepared. It's not personal, but it is ruthless. It has to be. The market rewards only those who learn to reflect instead of react. One of the greatest challenges traders face is the inability to sit still. It sounds simple, just wait. But for a trader, waiting can feel like torture. The fear of missing out is louder than reason. The urge to be in the market is stronger than the proof that waiting produces better results. Waiting feels like doing nothing, but in trading, waiting is doing something. It's exercising control. It's choosing discipline over impulse. It's choosing long-term survival over short-term excitement. Many of my biggest profits came not from brilliance, but from waiting. Waiting for the market to show its hand, waiting for confirmation, waiting for the noise to fade, and the truth of the trend to reveal itself. Most traders don't wait long enough to ever see the truth. Another psychological battle every trader faces is the need to be right. The desire to be right is a heavy burden. It blinds you. It pushes you to argue with price. It makes you cling to losing trades because admitting defeat feels like admitting inadequacy. But the market does not reward your ego. It punishes it. You must learn to love being wrong quickly. Small losses are the cost of doing business. Large losses are the cost of refusing to accept reality. When I look back at my most painful losses, they all share a common cause, not the strategy, not the market condition, not the volatility, but my stubbornness. I thought I knew better. I thought the market would eventually agree with me. But the market doesn't agree with anybody. It simply moves. And it's your job to move with it, not against it. To improve your trading psychology, you must redefine what success looks like. A successful trade is not only the one that makes money. A successful trade is the one where you followed your plan, honored your stop, waited for your confirmation, and kept your emotions under control. You can execute perfectly and still have a losing trade that is not failure. That is part of the business. Failure is breaking your rules and blaming the market for it. You must understand that no trader wins because he avoids fear, greed, or impatience. He wins because he learns to manage them. Fear will always whisper that the market is out to take your money. Greed will always whisper that you can squeeze just a little more profit. Impatience will always whisper that you are missing out. These voices never disappear. You simply learn to recognize them, acknowledge them, and act despite them. The best traders are not fearless, they are disciplined in the presence of fear. They are not emotionless, they are rational in the presence of emotion. They don't eliminate impulses, they override them with rules. Your rules are your shield. Without them, you stand naked before the market. And let me tell you a story so you understand this deeply. I recall a particular trade many years ago. The trend was clear, the opportunity strong, and everything pointed toward a significant move. I entered with confidence. Then the price began to drift sideways. Not against me, not really in my favor, just drifting. I grew restless. I began questioning the trade. I doubted my reading. I wanted action, so I closed the position. Moments later, the market erupted in the very direction I anticipated. That single moment taught me more than any indicator ever could. Impatience turns good trades into missed fortunes. But I also remember another time when I refused to accept a small loss. Price moved against me slowly, gently, almost politely. I told myself it would turn. I convinced myself I was right. And by the time I realized the truth, the loss had grown large enough to wipe weeks of profit. That taught me another lesson. Pride turns manageable losses into disasters. These psychological battles never end, but you get stronger with repetition. To truly improve your trading psychology, you must create an environment where mistakes are not just acknowledged but analyzed. You must journal. You must study your losing trades with the same attention you give your winning ones. Most traders refuse to do this because it's uncomfortable to confront their own flaws. But your flaws are the leaks in the boat. Ignore them, and the water will sink you. Another critical component of trading psychology is emotional detachment. I don't mean apathy, trading demands passion, but you must detach your sense of worth from your results. A winning day does not make you a genius. A losing day does not make you a failure. You are the same trader on both days. What changes is your emotional reaction. And if you allow your emotions to swing wildly with your equity curve, you'll make destructive decisions. This is why consistent position sizing is vital. This is why predetermined risk is essential. This is why you never increase your size impulsively. Controlling risk controls emotions. When the risk is too large, emotions take over. When the risk is reasonable, logic returns. Another truth. The market does not reward excitement. It rewards calm execution. It rewards clarity. And clarity comes only when your mind isn't clouded by fear of losing or desperation to win. The traders who survive long-term don't seek thrills. They seek consistency, and consistency requires routine. Every trading day must begin with preparation. Review the market, identify the levels, define your plan, and once the plan is set, you do not deviate. If you are uncertain, you do not trade. If you feel emotional, you step back. If you break a rule, you stop trading for the day. These may feel restrictive, but they are the fences that protect you from yourself. In time, you will find that trading becomes quieter, not easier, never easier, but quieter. You stop reacting impulsively. You stop chasing the market. You stop forcing trades. You learn to let the opportunities come to you. They always do, if you're patient enough. Improving your trading psychology is not about eliminating emotion. You are human. Emotion is part of you. The goal is to build habits strong enough to act as a buffer between impulse and execution. You must remind yourself daily, the market owes you nothing. You do not deserve a profit because you've been patient. You do not deserve a win because you've been losing. The market is not a parent rewarding good behavior. It is a mirror reflecting your decisions. If your decisions are sound, the results will follow over time. Trading psychology improves when you stop demanding immediate results and start demanding consistent behavior. Your job is not to win every trade. Your job is to execute well. Winning is the byproduct of good execution, not the other way around. If you're listening to this and something resonates within you, take a moment to reflect. What habits are hurting you? What emotions keep sabotaging your decisions? What rules do you keep breaking? What truths are you avoiding? If you want more insights like this, make sure you subscribe so you don't miss the principles that truly shape successful traders. And I want you to share your thoughts in the comments. What is your biggest psychological struggle in trading? Fear? Overtrading? Hesitation? Revenge trading? Admitting it is the first step toward mastering it. Remember this: your greatest battle will never be against the market. It will always be against yourself. The trader who conquers his mind conquers everything the market can throw at him.